Thousands of self-employed Britons are now staring down the barrel of a ticking financial time bomb, one that could erupt into severe penalties, escalating debt, and even investigations from HMRC. And the deadline? It's less than 2 weeks away. As of today, thousands of freelancers, small business owners, and anyone with a side hustle who filed a self-assessment tax return and owed more than £1,000 last year are now facing a crucial moment. The second payment on account deadline is set for July 31 st, and if they fail to act before that date, HMRC will not hesitate to respond with harsh financial penalties, starting with a £100 fine and spiraling into hundreds, if not thousands of pounds in added debt. But what exactly is this deadline? Why is it catching so many people off guard? And most importantly, how can you avoid being one of the victims of this looming HMRC crackdown? Let's break it down. This deadline affects self-employed individuals whose last tax bill exceeded £1,000. Under HMRC rules, these taxpayers are required to make an advance payment toward their next year's tax liability. It's called the payment on account, and it's meant to help spread the cost. But here's the problem: many people, especially those new to self-employment or just recently entering the side income economy, have no idea what payment on account even is. They assume paying once a year is enough. They don't realize that missing this July 31 st deadline could trigger a cascade of interest charges, financial penalties, and red flags that alert HMRC investigators. Claire Trutt, head of advice at St James's Place, has sounded the alarm. She warns, with there now less than 2 weeks remaining until HMRC's second self-assessment payment deadline on 31 st July, it's vital that taxpayers check what they owe and ensure payment is made on time to avoid facing penalties. And the penalties are steep. HMRC currently applies an interest rate of 8.25% on any unpaid tax from the moment the deadline passes. This isn't a one-time fee, it accumulates day by day. The longer you wait, the more you owe. And on top of that, you'll be hit with a fixed £100 fine just for missing the deadline. If that wasn't enough, penalties increase at 3 months, 6 months, and 12 months. Miss the deadline by 3 months, and HMRC will start adding daily fines of £10, capped at £900. Wait 6 months, and you'll be charged another £300 or 5% of the unpaid tax, whichever is greater. Wait a year? Another £300 or another 5%. It's a snowball effect that can turn a manageable £1,000 tax bill into a 4-figure financial disaster. And if that wasn't worrying enough, Seb Maley, CEO of GDOS, warns of a deeper threat: missing the payment on account deadline can easily snowball into bigger problems. You also run the risk of being investigated by HMRC. Late payments are one of the many red flags that the tax office looks out for. That's right. If you're late, you're not just paying more, you're also drawing attention. And with HMRC's growing digital capabilities, it's now easier than ever for them to spot discrepancies. They are not just waiting for you to come forward, they are actively scanning real-time data, comparing sources, and cross-checking accounts. This is not the HMRC of the past. As of April 2025, HMRC has rolled out even tougher penalties under its Making Tax Digital initiative. Under this new regime, late payments incur 3% penalties after just 15 days. Another 3% at 30 days. Then a full 10% annually after that. To put it into perspective, a self-employed individual owing £25,000 could end up paying more than £28,000 in just 4 months. That's an extra £3,000 just in interest and penalties. And it's all part of a broader push by the Treasury to close what's known as the £44 billion tax gap. To do that, they've hired more than 500 new compliance officers. They are not just sending letters, they're tracking every missed payment, every late filing, and every unusual pattern. And now, with real-time access to digital banking data, freelance platforms, and even social media transactions, HMRC has more power than ever before. This isn't just about forgetting a deadline. It's about proving that you're playing by the rules or facing the consequences if you're not. So what can you do if you're one of the thousands facing this deadline? First and foremost, check your self-assessment account. Now, log into HMRC online, review your payment obligations, and make sure you've accounted for both your first and second payment on account. If your last bill was over £1,000, and you haven't already paid at least 80% of the tax owed, you are very likely required to make this July 31 ST payment. Don't wait. Don't assume HMRC will send you a reminder. Because if you're late, there's no leniency. The penalties are automatic. The interest begins the next day. And the damage to your finances and your peace of mind can last for months. But what if you're struggling to pay? Claire Trutt urges, don't go silent. HMRC does consider reasonable excuses, but only if you contact them early. Ignoring the problem won't make it go away. In fact, it only makes it worse. Reaching out now gives you the best chance of arranging a payment plan, or at least explaining your situation before penalties pile up. And remember, under the new Making Tax digital regime, compliance is no longer optional. The Treasury expects this tougher penalty structure to raise an additional £370 million by 2030. That means enforcement isn't just likely, it's already happening. This crackdown is targeting everyone from long-time business owners to first-time side hustlers. If you sell on Etsy, freelance online, drive for Uber, or rent out a room on Airbnb, you need to know about this. The payment on account rule isn't just for traditional sole traders, it affects anyone with untaxed income over £1,000. And while the threat of penalties may feel like a hammer hanging over your head, there's still a sliver of opportunity. Because if you take the right steps now, you can avoid the worst of it. HMRC isn't out to destroy small businesses or punish side hustlers, it's enforcing compliance because the tax gap in this country has grown into a multi-billion-pound black hole. And for years, underreporting, delayed payments, and digital loopholes made it easy to slip under the radar. But not anymore. Not in 2025. What's changed isn't just the rules, it's the technology. HMRC's data systems are now linked to payment platforms like PayPal and Stripe, digital banks like Monzo and Starling, and even to popular marketplaces like eBay, Etsy, and Amazon. That side project you thought was below the radar? It's not. That unpaid tax from last year's crypto profits or online sales. It's already being cross-referenced. So even if you've never missed a deadline before, even if you think your business is too small to matter, this year is different. Payment on account is no longer something you can afford to ignore or postpone. It's become a frontline indicator for compliance and a warning light that triggers further scrutiny. Let's talk about what that scrutiny can look like. A missed payment on account might not seem like a big deal on the surface. You forget the date, you get a fine, you move on. But in the eyes of HMRC, it's a flag. A sign that you might not be managing your affairs correctly. That opens the door to questions about your expenses, your income declarations, your VAT registration if you've crossed the threshold. Suddenly, you're not just dealing with a fine, you're dealing with an audit. And audits aren't simple. They take time, money, and documentation. They can freeze your accounts, delay your refunds, and damage your financial credibility if you ever need a mortgage or business loan. This is why experts like Claire Trutt are urging action before it's too late. The payments on account system is designed to help spread the burden, she says, but missing the deadline removes that advantage entirely. It becomes a liability. A cost that spirals. And too often, it comes as a shock to people who just didn't know. But now you do know. So let's go through the essentials one more time just to make sure nothing is missed. If your last self-assessment tax bill was over £1,000, and you've not already paid at least 80% of the tax due for the current year, you are legally required to make a second payment on account by July 31 St. If you miss it, here's what happens. You're hit with an immediate £100 fine. After 3 months, £10 daily fines begin up to £900. At 6 months, an additional £300 or 5% of the tax owed is added. At 12 months, another £300 or 5% is added again. Interest of 8.25% applies from the day after the deadline. And under the new Making Tax digital regime, if your payment is more than 15 days late, an extra 3% of unpaid tax is charged. After 30 days, another 3% is added. And after 31 days, 10% annually. Let's run the math. A small business owner owing £5,000 could, by mid-October, owe over £5,600 with penalties and interest. If the unpaid amount is £15,000, the total owed within a few months could stretch beyond £17,000. Now imagine what that does to someone who's just started freelancing, trying to build something from scratch in the middle of a cost of living crisis. That's not just a penalty, that's a financial cliff edge. And for many, this is happening without warning. Why? Because HMRC doesn't send a friendly reminder or a clear invoice. It's buried in your self-assessment online portal, often overlooked unless you know exactly where to look. That's why this video matters. That's why you matter for watching this, taking action, and possibly sharing it with someone else who might be caught off guard. Because we're in a time when financial ignorance isn't just costly, it's dangerous. In 2025, financial resilience means more than budgeting or cutting back on spending. It means being ahead of deadlines, understanding tax, knowing what your obligations are, and above all, taking control before HMRC does it for you. So what happens if you simply can't afford to pay right now? There is a way forward. HMRC offers time to pay arrangements. If you reach out before the deadline, you might be able to set up a payment plan to spread the cost. But this option only works if you're proactive. If you ignore it and wait until fines kick in, your chances shrink. They won't automatically offer it, you need to ask. And you need to do it now, before July 31 Saint. Don't let fear or confusion stop you. Don't assume it'll go away. You are not alone, and many people are in the same boat. The worst mistake you can make is silence. At a time when self-employment is surging and more people than ever are earning extra income through side jobs, online businesses, and gig work, the tax system has become more complex and more unforgiving. That's why you need to stay informed. Our channel is dedicated to helping you understand what the government, HMRC, and the DWP don't always make clear. We break down every deadline, every penalty, every benefit, and every opportunity. So if you've learned something today, if you're planning to check your self-assessment portal now, or if this video just saved you a £100 fine or worse, do us one favor. Subscribe. Stay notified. And share this video with anyone you know who might be self-employed, freelancing, or earning side income in the UK. Because information like this doesn't just help, it protects. And right now, that protection could mean the difference between staying afloat and drowning in tax debt. This is your warning.